Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of July 16th. Each week I go through the same process just to decide how aggressive I'm going to be at deploying capital. We look at overall health conditions, health indicators, recent watch list performance, sector performance, and then this tells me if I want to go ahead and be buying individual stocks based on my patterns and triggers. So heading into the week of July 17th, market conditions are good. I am deploying capital if I see setups I like in strong stocks. Basically, I'm already, all my capital is deployed, so there's not much more I can do until some of the trades close out. There are current watch lists out there. There is the best swing trading stocks watch list for July, and this is just a list of stocks that have been very strong recently. There's also the current stock watch list. This is specific patterns that are setting up, although I haven't updated it in about a month because my capital is deployed anyway, so I've been saving myself a bit of time and haven't been running that scan, but you could check out that article to run the scan yourself if you wanted, and hopefully if I have a bit of time this week, I will update that one as well. You can also check out all the other watch lists that I regularly update. Best performing ETFs, best performing stocks, buy the dip stock list, and long-term holds. Let's get to how the indices are doing. I look at 4 different ones to give me a snapshot of how the U.S. market is doing. We have the tech stocks, just large companies, the S&P 500, NYSE Composite, wide array of stocks and industries of different sizes. Great measure of how sort of an average stock is doing. Russell 2000 is smaller companies, and then we'll also look at the Canadian index. And everything in the U.S. in an uptrend. We have the NASDAQ in an uptrend going back to the start of the year. The NYSE Composite, again, this is our broadest measure of how stocks are doing. A little bit choppier, but we've been in an uptrend since this March low here and working to the upside. Russell 2000, again, weaker, hasn't quite reclaimed those early 2023 highs, but at least for the short term, since that March low, we are in an uptrend there as well. S&P 500 was in a weak uptrend to start. You can see just barely making higher lows here, higher highs here, but since then we have accelerated and we are in an overall uptrend. The S&P TSX Composite, this is the Canadian index. You can see much more range bound, stuck right in the middle of the range. It's moving up currently, but we want to be a little bit more selective on the Canadian side, sticking to the industries that are doing well, because overall not doing quite as well as some of these other ones like the S&P or the NASDAQ in the US. Bitcoin still in its overall uptrend. We are consolidating. Wouldn't be surprised to see this pop out the bottom, maybe back down to like 29,000 or so. False breakouts very common. You can see we chopped around for a bit, had a bit of a pop, and then we went out the bottom and then had the strong surge. Same thing happened over here. We chopped around, false breakout at the bottom, little pop, and then we had a bigger false breakout out these lows before a big surge. So I wouldn't be surprised to see some selling here, hopefully followed by another rally, which I'm sure a lot of people are hoping for. So the Canadian, mostly sticking to the tech, consumer discretionary materials. Those are the type of sectors that are doing well. Let's look at the S&P. This is the health indicators, just another measure of how the market is performing, looking at more of the underlying strength of the current trend. And there are, doesn't show up here anymore for some reason, but we have 82% of S&P 500 stocks above their 50-day moving average. 71% of all U.S. stocks are above their 50-day moving average. Nothing special about the 50-day. It's just a very crude measure of how many stocks are in short-term uptrends. And right now, this is very good. Gets the smiley face. Volume, not really important to me at the moment. This is the average daily movement in percentage of the S&P 500. Uptrends are classified by very low volatility, low daily movement, and you can see we have not had any big drops. A 2% daily drop is usually a warning sign. That's aggressive selling coming into the market. We have not had any aggressive selling, at least not hitting 2% a day, until we go back to March, where we got a couple days in here where we were. And if you look back to the downtrend, well, we can't see as much of it anymore because this chart zoomed in a little bit. But you can see a lot more of these big volatility days, more indicative of downtrending behavior. But since the start of the year, it's been much more tame, and you can see we're getting tamer. That is good. That is uptrending type behavior. This is the advanced decline line, the number of advancing stocks minus the number of declining stocks as a cumulative number. And we were lagging a little bit. The S&P had made new highs, we can see right here in June. And if we go down here to the NYSE advanced decline line, it had not cleared above its prior highs. But now we are making new highs, and we're in an overall uptrend going back to June, so that's good as well. This is the up volume versus total volume, just gives us a sense of how much enthusiasm there is or lack of it. And nothing of interest. We're really only looking for when there's only 10% of volume is in stocks moving to the upside, or 90%. And we haven't quite hit this 90, which is the top black line, and we haven't quite hit that 10%, which is this black line. This was actually about 19% when I calculated it. So not really close to that lower line either. So nothing relevant there. So we have several indicators, again, still pointing that this is favorable market conditions. The ultimate indicator, how many quality setups are we seeing and how are those trades working? I have my capital deployed. Basically need to wait for some of those trades to close out before I can deploy more. So it's been good. Trades are working. Seeing lots of setups that I could be taking. If I was still taking trades, the trades I'm in are working well. So overall, that's really good to see. Just another confirmation that the market, at least for the moment, is doing very well. And that's all I trade based on, is how the market is doing now. Sectors on the move. Still, consumer cyclicals, also called consumer discretionary, technology, industrials, basic materials, and real estate also moving up. So these are the ones that tend to occur or tend to be near the top of the list on these time frames. So we have consumer cyclicals up here, technology here. Industrials more the middle of the pack last week, but still some pretty good numbers posted. Basic materials made a bit of a surge. And basic materials also moving up. It's about halfway on the 1 month performance, but consumer cyclicals, industrials near the top of that, technology also in the top of that section, real estate, as I said, making a surge near the top over the last month. And if we go to the last 3 months, it's this technology, consumer cyclical, and industrials. Communication services had been strong. It had dropped off last week, but now it's right back up there. So we could also, communication services, could also put that one in a little bit of a laggard on the 1 month, but still doing strong on the 3 month and had a nice pop last week. So almost most of the sectors are performing pretty well, which is also a great sign for overall market conditions. Most things are moving up and doing well, so kind of no matter where you're at, probably doing okay. And what I'm doing right now, if I see setups I like and they trigger, I will deploy capital, and conditions are good. I also like to day trade and swing trade, as you know. You can check out how I do that in the price action stock day trading course, the Euro USD day trading course. And I'm always also passively investing. This is just continually buying the same ETFs over and over again each month, regardless of what the market's doing. Buy and hold. It's simple. It's not going to produce as much as the day trading or swing trading in terms of return, but it's much less work, and it keeps you sort of that money working in the background. So that is your swing trading stock market outlook for the week of July 17th. Have a great week out there.